Hi, welcome to the channel again, or welcome to all the newcomers if you're new here. Today we're going to be reviewing a trade. We're going to be adding to the trade review series that we've got, the playlist. Yeah, we're going to be reviewing a trade that I took yesterday afternoon in the New York PM session. I feel like it had quite a bit of educational value to it, so yeah, that sounds interesting, then stick about. Before we get started, please do hit the like button, and if you haven't already and you like this sort of content, then please do subscribe. Small channel, just getting started here, and once we hit the 500 subscribers mark, we will be looking at doing some live streaming sessions, and hopefully doing a few giveaways as well. So let's say hit the like button, and please do subscribe. We also have a discount code with Apex. I think you can still get the 80% off discount with them if you use our discount code, which there's a link for in the description. Yeah, so these are the orders from Trader 8 basically. I know there are a few people out there like, it's demo trading, you're not really taking these trades, you're just reviewing trades with hindsight, which, you know, if you follow my socials, you'll see that I'm clearly not taking these trades with hindsight. You know, I'm trying to review my trades and why I took them, and help guys out and stuff like that. But yeah, if any of you are doubting that, then I just wanted to put on screen the screenshot from Trader 8 where, yeah, you can clearly see that I took these trades 17:46. That's my time, UK time. But yeah, those are the orders that were put in, as you can see there. I took the trade on an Apex, one of my Apex evaluations. So yeah, just wanted to come on and just clear the air on that, because I know there's a lot of people out there that are sort of doubt this, and a lot of people do fake it, to be fair. So yeah, you can see the orders in there. Certainly got nothing to hide, you know. I'm not trying to kid anybody, and you'll know that from my socials that these are legitimate trades that I do take on live accounts and on my evaluations. So yeah. So yeah, let's jump into the charts basically. I was looking at the charts from the pre-news. There was news basically at 8:30, and that drove price significantly higher. Was kind of consolidating down here throughout London. Didn't really do too much, but London did put in a low, tapped into this 4-hour bullish fair value gap, and yeah, as I say, when the news driver hit, boom, we got a big move up, and what it did do is it created this quite large opening range gap. That's something that I'm gonna refer to. So yeah, I kind of just sat back and watched that, and then we had the open, which kind of just chopped about at the top here. Did create a high at 9:35. Dropped down and gave us what effectively was a short entry. I wasn't looking for shorts, so didn't manage to catch this move. So yeah, moving on to the trade idea. So we see prices kind of moving down, and it's moving into the depths of the opening range gap here. As you can see, that's marked out, and I was expecting price to be bullish, to be honest with you. So if it's bullish, we expect these lows to hold, certainly the London lows here to hold, and probably to hold these lows even as well. So yeah, we're just watching the 5-minute chart essentially, and we're watching price just moving down, and it gets to a stage here where it kind of stops moving down, it wicks quite heavily, and shifts up. It does create a 5-minute fair value gap, having said that, which is a bearish fair value gap. It's a SIBI here, but it does wick down and come back up, and it almost touches, I think it's like a tick or two out, I don't know how much, but it almost touches that London high, which is a kind of key area. Even though we've broken that, we can then, once we've broken above that, we can then kind of expect to see that potentially be treated as support. So yeah, we've touched on into that. The other thing I wanted to note from this as well is if we look at this opening range gap, what we actually hit is the lower quadrant of it, which comes in around here. So it tapped the London high and the Asia high as well. Having said that, so it tapped the Asia high, almost tapped the London high, and also the lower quadrant of this opening range gap. Now, if we're bullish, we'd expect to see some part of this gap to stay open, this opening range gap. So yeah, it was just kind of watching price, wasn't thinking too much of it. But if we were going to still be bullish, then here's where we'd likely see some form of reversal. So if we move things along here, we can see that the following 5-minute candle, the 11:45 candle, and we're getting towards lunchtime here, at 11:45, it closes above this fair value gap. So that marks a significant structure shift. We've hit sort of key areas, and can potentially use this as a reversal now. So yeah, it's closed above that fair value gap, which we can now potentially look to treat that as support in the form of an inversion fair value gap. So I'm just going to change that over, and then if we drop down now into the 1-minute chart, so as we can see, we've closed above that, and price just kind of rallies up. To be honest with you, it's not like really sort of speedy action, but it does kind of rally, and we're getting to the lunchtime macro here. So 11:50 to 12:10 lunchtime macro, where price can reverse. But something that I had mapped out on my chart was the swing high to low here, and we can see if the lunchtime sort of macro, where we've had a trending AM session, the lunchtime macro can quite often pull back into 50% of the range, and we can see we're almost there. To be honest with you, it's almost already got there. So that has kind of played out a little bit earlier than the macro usually delivers it. Yeah, we can see here that the price sort of steadily comes up, and then at 12:02, so here, no, next candle, 12:02, we get it kind of tops off a little bit, and price then begins consolidating, and this went on for a fair while, and if you can see here, there's not anything too interesting from this move up. There's not like a big displacement. All we've got is this 5-minute inversion fair value gap, that we're waiting to see if it does come back down into it. Does it hold it as support, or does it stay above it? We'll wait and see. But yeah, price begins kind of consolidating, and I'm going to move this along fairly quickly now, because I want to get to the interesting part. We can see it's consolidating here, and this is where it got a little bit more interesting. So the 12:29 candle essentially whipped down and took out some minor sell side here. So this is sell side. It actually took out this wick as well, and it dropped down with a little bit of pace there. So yeah, I was kind of looking at this and thinking it's interesting. You know, it's consolidated, whipped down, taken out a bit of sell side, and it does create a fair value gap in there when it dropped down. and took the sell side. So that could be significant because it's a fair value gap that's related to a candle that has taken liquidity, and we always treat that as, you know, potentially more important than any other candle with a fair value gap attached to it. So it whips down, and after the formation of this fair value gap, breaks back above it quite significantly as well. So I had that marked out, and then because it's broken above that, we can then potentially treat this as support in the form of an inversion fair value gap. But I had that mapped out like that, and was just kind of watching as price developed. So we're at 12.31 here, and price kind of just shuffles about. It does stay above this, I believe. So you can see with the bodies here, it kind of stays above. It doesn't close below that inversion fair value gap, if you like. If we move it along 2 candles, it then breaks again. So it respects in here, respects the low of that inversion fair value gap, and then we get a little bit of displacement to the upside. And here we get a standard fair value gap created, a bullish fair value gap with a little bit of displacement towards the upside. So where are we now? We're at 12.40 now, and I was watching this, and I quite fancied it actually as a long trade. It looked like the structure had shifted. We kind of V'd down into that and back up, consolidated, whipped down, and then we see that there is some movement towards the upside. So I'm thinking the market looks like it's going to go long here. If I just flick back to the 5-minute chart, now something that I found interesting is I had it mapped off as I had mapped out the premium and the discount, and I had this mapped out of the entire range. So since we've been consolidating, I took the high up here from last Friday and the low that we created on Thursday, and mapped out the premium and discount range. And what's quite interesting is if we go back to the 5-minute, we actually just about are still just about in a discount, which means it's okay for us to look for, or it's better for us to look for longs, seeing as we're in a discount of the range on the higher time frame. So that was quite interesting to me. I had that on the side there, and that was in the back of my mind when looking at this long, because people may be thinking, well, how can you buy when it's up there? It's just charged up. But you know, we are still in a discount. So yeah, I was looking for buys here essentially based off of these inversion fair value gap and the creation of this fair value gap, and with this, treating this as a potential structural shift in the market. So price taps in to this fair value gap, and bear with me because I'm going to try and replicate this by hitting the buy button pretty quickly. So that's where I got my first buy in. I took one contract out on that wick, and my stop loss was down here. So pretty decent stop loss, and my take profit was here. So I was looking at this, and this was the move down from earlier. So from just after the mark, so the 10 o'clock kind of dropped down, and it left these relative equal highs up here at 10.39 and 10.49, and that was where I was thinking we're probably going to get a drive to if we do get a decent move here. I actually thought that it could go longer. I believed that it was going to go for these highs and potentially even come up into the consequent encroachment of Friday's wick, but I didn't really want to hold it for that long, to be honest with you. So I was quite happy with these equal highs. It seemed like the obvious play. We also had a high kicking out here, so but obviously the immediate target was this high here, to break this high, and then we can start looking at further targets. So we've entered into the trade. I took one contract out here. Stop loss was pretty adequately placed, and you know, $300 in with the chance of making 1,000 is a decent risk to reward ratio. So yeah, if we move it along, I think I took the next entry. Yeah, so I'm moving it along here, and I'm going to try and be as slow as I can doing it. So what I was observing, and the key thing for me, why I added to this trade, was the wicks. Now the bodies of these candles, and a lot of people, perhaps some of you may look at this and think, oh, it's choppy, but you've got to think about the time element of this. So we're at 10:42, and there's a macro starting at 12:41. Sorry, we're at 12:41. There's a macro starting at 12:50, and I have that in the back of my mind. I'm thinking the price prior to these macros can start spooling, and this is exactly what price done here. It began spooling, preparing for a large move in one direction. So move things along. This candle wasn't too interesting, to be honest with you. I think it was the 42 candle or the 43. Yeah, so there, that candle there. When I saw that body close, I entered again. I pulled the trigger on another contract, and I went in quite heavy on this because it looked really nice the way it was wicking, and hopefully you can see that from the market replay. I'm going to try and catch these as best I can. So I entered there, and then I entered there as well. Literally just pulling the trigger. So it was varied, but if we look at these wicks, I mean they're reasonable wicks there, and they're wicking right the way through a fair value gap and an inversion fair value gap, and to top it all off, we've got a bullish order block there as well. So it's strong. Yeah, it's a strong area, particularly if we start seeing these wicks like this prior to a macro. So yeah, I'm loading up here now. I'm 3 contracts deep, and I think on the next candle as well. So yeah, the 46 candle, I'll buy again. Now that didn't wick down anywhere near as much, but it did tap the 50% range of that fair value gap. So it was still quite interesting to me. So I'm 4 contracts deep here, and my risk is increased, but as is my reward. Now I wasn't going to keep the whole 4 contracts on for the entirety of the move. I knew that, but I wanted at least for it to take one of these highs, because I definitely thought that this high at least was achievable, and if it takes the upper high as well, great. So I'm just going to map out the trade here so you guys can see it. Let's just pop that up there. Yeah, so we're in, and I've loaded up four contracts deep. You know, it's already given me a bit of profit. I mean, these wicks were interesting. When I saw the body of the candle down here, it was kind of like, oh, not easy. But once you see them close, that's when you can pull the trigger. You know, if you see them close like this over a strong zone, like I felt like this was, particularly after a run on sell side. Yeah, can give you confidence, and it did for me in this case. So yeah, let's move things forward a little bit here, and we can see that I think bang on the 1250 macro Oh no, it's just before it really starts driving. Price really accelerated, and I was right about it spooling. You know, it looked like it was spooling. It was wicking these PD arrays, and it pretty quickly broke that high. As it did that, I immediately took 2 contracts off. Secured the trade essentially. Even if it comes and stop me out, I'll take some profit, or be a break even. Yeah, it was aggressive. So on the next candle, I believe, I think there's another poke up here. Yeah, so here I took another contract off, which was probably a mistake, in all honesty. I probably should have left something in to take at least this high. To be honest with you, I was quite happy taking 2 off there, but taking 1 off here was a little bit impulsive of me. So, but that's what I've done, and I'm going to review it as I traded it. So yeah, took 1 contract off there. Now I'm quite deep in profit. We're already $1,000 up. So at this stage, I moved back, and I was quite comfortable that we're onto something here. We're in for a decent runner. And I moved over to the 5-minute chart. And what was quite interesting was when it broke this high, I then decided to treat that as a potential breaker block. So if we move it along again, we get a fair value gap develop here, a 5-minute fair value gap, which is great. You know, when you're getting these sort of higher or medium time frame PD arrays develop like a breaker block and a fair value gap, you've got some strong support there to potentially hold up this trade. At this stage, I went to break even or just over. Yeah, if it reverses back on me now, I've already taken a decent amount of profit, and I'll be happy with that. Stop loss break even, yeah, exactly. So price hits the 5-minute relative equal highs pretty quickly, to be honest with you. Now I'm just going to move it forward a little bit. What I actually done here was I cancelled my take profit, which is not always advisable, but in this case I felt like this could really run. And I fancied chancing it, and what my intention was to do was to trail the stop loss rather than just leave a take profit order in. So that's what I done here, and I rolled the stop loss up to just below this breaker, bearing in mind I'm deep in profit anyway. Even if it hits this, I'm gonna be up and quite satisfied with it. So the macro's in full swing now. You know, we've hit 12.50. We're expecting price during the macro 20-minute window to deliver either buy side or sell side, and in this situation we're looking at it delivering the buy side for us. So yeah, it's fully in swing. I was actually managing it from my phone, believe it or not, because I was doing a few bits around the house. So yeah, I was just watching it on the 5-minute chart, and I watched it come up and take these highs, which it did right here. And once it done that, I was quite happy to say I'm happy to take profit there. And if it pulls back on me, I put my stop loss just above that candle. I watched it take the high, drop back down to the 1-minute chart. I watched it take the high, and it came back, and then I was expecting it to shift up further potentially, but at the same time, if it didn't and took me out, I'm $900 up. So that was my thinking. It did swing back and it took me out there, which is fine. You know, I was happy that I managed that trade and the risk involved there quite appropriately, and it hit my target. So yeah, very happy with that. Pretty aggressive move, which is the type of moves you want to be catching. You want to be involved in these types of moves. Made around 2,000 on it, so $2,000 in profit. As I say, minimal drawdown. I know these wicks down here were a little bit aggressive. So but yeah, if we just come out and look at the 5-minute chart, you can really see how aggressive that move was, and hopefully my thinking behind it. Now, what I found quite interesting is I had my fib tool from here, the swing low to the swing high of this move, and bear in mind I was looking at these highs and the consequent encroachment of Friday's wick, but something else I was also looking at is that swing high, that swing low to swing high, the 1 standard deviation from there. Now those were potentially targets of mine, and I know you're thinking, yeah, of course they were, you're saying that now, but that was honestly was the case. I was looking at those as potential targets. I was looking at them for targets even when we started the open from here, but unfortunately the move went in the other direction, and I remained relatively safe. So what was interesting is it did chop back and it did chop about. There's no way I was going to hold it through this, to be honest with you, but if anyone did, then fair play. But what was quite interesting is it got towards, I think it was 3 o'clock, and it really, yeah, so if we get towards the last hour and it just shot straight up, and funnily enough, what did it hit? Almost, I think it was pretty much to the tick as well, which was freaky. It slapped right on that. The 1 standard deviation from that swing low to that swing high, which I'd actually mapped out, which was crazy, to be honest with you. And maybe I will eventually get to a stage where I'm leaving a runner for those sorts of highs. Perhaps that's where I need to improve upon. But yeah, I just thought that was interesting. It came back down into that 5-minute fair value gap that I had marked out from earlier, and obviously we've got the breaker in there as well. Yeah, so that was the trade basically. Hopefully you guys find that insightful. Yeah, and we'll be looking at doing a few more of these. I feel like they have decent educational value, so yeah, if you like these, please do like the video, subscribe if you haven't already, and let me know in the comments what you think. But yeah, for now, thanks very much.